Welcome to Jaview's platform once again. We are still at the early stage of this Forex education class and we are making progress. In today's episode, we shall be talking about candlestick patterns in Forex trading. What are candlesticks in Forex? Candlesticks are a type of chart used to represent price movements in Forex trading. They are more visual than traditional bar charts and provide a range of information about currency price movements. Candlestick patterns are a popular and powerful tool in the field of Forex trading. Originating in Japan centuries ago, these patterns provide traders with valuable insights into market sentiment, potential price reversals, and trend continuations. Understanding and correctly interpreting candlestick patterns is essential for technical analysis and informed decision-making in the dynamic world of Forex trading. Candlestick patterns, candlestick charts, represent price movements over a specific time frame, typically in intervals like 1 minute, 1 hour, or 1 day. Each candlestick consists of a body and wicks, or shadows, visually representing the opening, closing, high and low prices for the given period. Candlestick patterns emerge from the combination of these elements. How to read candlesticks. Candlesticks are made up of 3 specific points: the open, the close, and the wicks. The candle will turn green-blue if the close price is above the open, and it will turn red if the close price is below the open. The open price depicts the first traded price during the formation of a new candle. The high price is the top of the upper wick, and the low price is the bottom of the lower wick. The close price is the last price traded during the formation of the candle. How to use candlestick patterns in Forex trading. Candlestick patterns can be used to identify potential market reversals or trend continuations. Traders can use them to determine entry and exit points in the market. However, it is important to note that candlestick patterns should not be used in isolation. They should be used in conjunction with other technical analysis tools and fundamental analysis. Why Forex traders tend to use candlestick charts rather than traditional charts? Candlestick charts are more visual than traditional charts and provide a range of information about currency price movements. They help traders to identify many different types of price action far more efficiently compared to using other charts. The same method applies to candlestick charts for all financial markets. Common candlestick patterns. There are many different types of candlestick patterns, but some of the most common ones include doji. Doji indicates market indecision. It occurs when the opening and closing prices are virtually the same. Different variations such as long-legged doji and dragonfly doji convey nuanced market conditions. Hammer and hanging man. Hammer and hanging man patterns signal potential trend reversals. Hammer occurs after a downtrend and suggests a bullish reversal. Hanging man appears after an uptrend and implies a bearish reversal. Engulfing patterns. Bullish engulfing, a bullish reversal pattern, where a smaller bearish candle is followed by a larger bullish candle. Bearish engulfing, a bearish reversal pattern characterized by a smaller bullish candle followed by a larger bearish candle. Morning star and evening star. Morning star is a bullish reversal pattern, usually signaling the end of a downtrend. Evening star is a bearish reversal pattern indicating a potential end to an uptrend. Double top and double bottom. Double top, this is a bearish reversal pattern formed after an uptrend, suggesting a potential trend reversal. Double bottom, this also is a bullish reversal pattern seen after a downtrend, signaling a potential trend reversal to the upside. Paying attention to these patterns helps to have a clearer picture of the upcoming market trend. We shall continue from here in our next class to discuss some other candlestick analysis indicators. If you have not subscribed to this channel, kindly do so now and click the bell icon to get informed when the next video is out. Till I meet with you next time, please stay safe. Bye for now.